There are arguments that we should be relaxing the listing rules for tech companies. And when we say tech companies, I think we look at businesses that happen to use technology to help them. I don't look at crazy, weird technology stuff. I think it has to be a business that is underpinned by a platform or technology that makes it a better provider of a service to a customer set, be it enterprise or consumers. So I think the problem we've seen to date has been that exactly this point, that there's been a fairly thin market for high quality technology businesses. Some of them are maturing and their growth rates are coming off. People are seeing what's going on in the US in particular, although in China as well, but in particular the US, and seeing the opportunities. And then you have some firms promoting these backdoor listed mining stocks or new listings on the promise of this great world, and it's just not happening. And yet mums and dads get pushed into them by overexcited analysts and brokers. I think that's terrible.
Receiving 5% fees to
it's terrible. And a lot of these companies are companies that have come to the professional investment sector, the Blue Skies and the Airtrees and others, and we've said, you've got to be joking. And next thing they're listed on the ASX. Some of them are okay companies, but the valuation is nuts, and some of them, both things are nuts. It's a nutty idea, it's a nutty valuation, and it gets away, and that really upsets me. The reason it upsets me is because when those things go pear-shaped, and you look at one page today, one page is 90% off. It's 1 year high, 90% off, and refined is 93% off its 1 year high. Now maybe it's a fabulous buy, right? And it's going to, but chances are maybe it's not. And I think the problem is that the mums and dads who buy into these companies think, this whole thing's rubbish and this technology thing's rubbish, and in fact it's not. The underlying role of technology in changing business models will continue to accelerate. Yeah. So I think you've got to parse out the quality, maybe thin quality retail stocks you can easily buy, find a way to access some overseas quality stocks, because there are very good overseas quality technology stocks, find a way to participate in a slightly less liquid way through perhaps some quality crowdsourcing platforms, and then through funds, whether it's technology funds or whether it's private equity funds.
Yeah. Yeah. I think there's two problems with what we've seen with some of these lower quality tech companies listing on the ASX. One is that investors are not protected because there's no one filtering these or providing any sort of guidance to investors about what the quality of this is. And everyone says, there's a prospectus and there's, lots of information's public, but there's still massive information asymmetry in that transaction, which is not being mediated or filtered by anyone. So part of these changes are to protect investors from exactly what Daniel just outlined, which, generally just is better for the industry and the credibility of the industry, full stop. The second is that companies that list earlier than they should, because of our investors looking for liquidity, when they don't perform as planned, which almost always happens to early stage companies, even the ones that, all of the ones that we would invest in.
There's a reason they stay private for a while.
That immediately people sell down, and that is the most immediate way to decimate the value in your company and kill any future and opportunity that you had. So these changes are twofold. They're to protect our investors, but they're also to protect the companies as well from not doing something completely stupid. Yeah. And they are doing this as a mechanism of last resort. They're not listing because they want to list, because who would want to do that?